What's up, you guys? It's Sanam Khan. Did you get caught up in the whole MMTLP situation? Did you get caught up in the metamaterials stock situation? FINRA fraud? It's craziness going on out there. And Investor Place just released a bombshell article that everyone is very, very upset at, especially on Twitter. So in this video, I want to go over this article and I want to know what your thoughts are about the article. Make sure you like this video, subscribe to the channel, and let's get started. So the bag holder's guide to metamaterials MMTLP stock. It's not the first company to make non-voting shares disappear, but it's one of the most brazen. Last Wednesday, executives at metamaterials, ticker symbol MMAT, finalized a bizarre transaction. In a single stroke, they converted the firm's entire listed block of preferred MMTLP shares into untradeable common stock of Next Bridge Hydrocarbons Incorporated. At first glance, the transaction seems pretty straightforward. It's moving cash from one pocket into another. Metamaterials maintains full control of Next Bridge's 134,000 acres of West Texas oil, so little has changed on the enterprise level. However, it's easy to pin blame on FINRA for halting trading in MMTLP stocks in the days before the transaction. But try telling that to anyone who owned preferred MMTLP stock, like you guys. To them, their preferred stock, which was trading at $12.50 less than a month ago, is now worth about as much as a horde of stuffed animals sitting in my attic. There's no easy way to offload them, and blaming FINRA barely makes anyone happy. Even metamaterial common shareholders don't have much to celebrate. Special language in the Next Bridge prospectus essentially awards virtually all rights of the spinoff to the company's insiders. MMAT stock is now down 50% for the year, and I think 94% for 2020 since its 2021 peak. This begs the question, what should bag holders now do with metamaterial stock? Metamaterial stock, the making of a hustle. First, a little background. Because if you've lost money on metamaterials, there's a good chance it's someone else's fault. So now the article goes on to basically talk about how people gassed up metamaterials for no reason, said it was $1 billion company when it really wasn't. So on December 13th, federal prosecutors and the SEC accused several online influencers of running a $100 million pump and dump scheme that included alleged market manipulation in the precursor to metamaterials, Torchlight Energy Resources. According to the SEC complaint, 4 defendants bought around 800,000 shares of Torchlight at prices between $1.68 to $1.95 in February 2021. They would proceed to promote false information about Meta itself, e.g. that it was worth north of $4.8 billion, and promoted the purported benefits of the merger. Now, a few comments here that I have. First of all, the fact that these guys were YouTubers, I'm pretty sure this is actually when I first got introduced to this whole situation. There was a couple of YouTubers who literally did a pump and dump, which, by the way, guys, that's totally illegal. What they did is they gassed up a stock, had their following buy into the stock, manipulated the price essentially, because when the market cap is low for these stocks, it's very easy for someone to manipulate the price. Whereas if there's a Tesla, I could talk all day about Tesla. It's not going to change the price, guys. All right. So they manipulated the stock and then they sold when the stock was at its highest or a lot higher than what they bought it for. And then this happened last year and they got caught. And that's another lesson from this story, that if you do shady stuff like that, you might not get caught today, not tomorrow, not a month later, not a year later, but you will get caught eventually. So the 4 conspirators would later allegedly sell at prices up to $3.63. So they got an easy, 2-3x over the following weeks, just as momentum traders and social media watchers began to swarm in. Shares would eventually peak at over $12. In other words, investors who lost money on metamaterials were likely either 1, using faulty information designed to manipulate markets, or 2, following other momentum investors who were fooled by the first point. Now, this is the next section of the article, mismanagement at metamaterials. The article goes on to further blame metamaterials. Metamaterials management, however, hasn't helped the situation. Since its 2021 reverse merger, the firm's top brass has embarked on a massive spending spree, burning through an average of $34 million every quarter while avoiding capital raises. From a managerial standpoint, this is troubling. Research and development firms are notorious for their high capital requirements, and Meta Material executives have been spending cash as if the good times will never end. The money raised from their upsized reverse merger with Torchlight could now run out by this spring. So other CEOs tend to be more judicious with cash from capital raises. And then it gives examples such as the CEO of AMC and Elon Musk from Tesla. So this is what happened when AMC went through that crazy rise in price like GameStop. I was actually one of the guys that called. I said that they should sell shares so they could raise money. AMC CEO did exactly that. When it was at its peak price, AMC CEO sold a bunch of shares, raised money, got them out of the brink of bankruptcy. He literally saved their business. And then same situation with Tesla and Elon Musk. Elon Musk has sold Tesla shares many, many times when it was at its highs just to raise money to build the Gigafactory. That's how they had so much cash available. Meanwhile, Meta Materials management has done the opposite by pursuing too many projects across at least 7 different areas. The company has stretched itself thin with little success to show, and capital raises are far harder now that shares are in the $1.25 range. Every $50 million in new equity now dilutes existing shareholders by 11%, assuming the pain is spread evenly. The company's weak fundamentals only add to the concern. Meta Materials' legacy oil and gas business procedures, scant economic value, and 86% of the parent's development, blah, blah, blah. So now let's get to the juicy part. How to make $71 million disappear. The most worrying issue, however, is the way the firm has treated its external stakeholders. Consider Meta Materials' deletion of preferred shares. In 2019, a similar case involving AmTrust Financial Services caused its preferred shares to essentially disappear during its $3 billion go-private deal in 2018. Sounds really familiar. The company was taken to court by shareholders and eventually settled the suit for $13 million. MMAT's case is even more brazen. I don't even know how to pronounce that word. Rather than simply delist the preferred shares and fold the assets into its equity, management added language that severely restricts the rights of external shareholders. So here's one of the things they mentioned. Our board has the authority to cause us to issue without further vote or action by the stockholders shares of preferred stock in one or more series. And then I'm going to skip the other part, and then I'm going to get to the part where it says the bag holder's guide to Meta Materials MMTLP stock. That leaves current investors with a few good choices. What should bag holders do? For Meta Materials' former MMTLP stockholders, the only realistic course is a class action lawsuit. These suits occasionally manage to recoup a portion of losses, and shareholders could use AmTrust settlement and others as a precedent to argue their case. Punitive damage towards awards are rare though, however, so many investors will prefer to sit on the sidelines and avoid the hassle. For MMAT common stockholders, the choice is more difficult. They could go through the status quo or loss aversion, which means other investors might feel that selling the remaining value they have left of MMAT is still better than nothing. Why hold on to $500 of shares that could go to zero? Either way, unfortunately, bag holders will likely face significant losses. The hundreds of patents that Meta Materials claims to have are only worth the cash flow they can generate, and there's no guarantee that any of its projects will yield results. Meanwhile, Meta's dwindling cash reserves will either require a significant capital raise by Q2 2023 or the sale of parts of its business. So long story short, the reason why people are very upset about this article is that it's basically having people lose hope in the situation. People are really, really upset and want to take action, and articles like these are kind of stopping people from doing it. They're like, hey, we can't really do much, just forget about it. So let me know what you guys think in the comments below. I'll see you guys in the next video. Peace.